Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is Saturday, 9th of November 2024. Current time is 10:25 a.m. and I'm hoping this particular recording works. Now, I'm having a little bit of difficulty with my computer for some reason, and I actually started recording a video, and then for some reason, Zoom just completely quit and then restarted. So if that happens again, I might just give up, because that's really annoying to be recording and then it just fails. Anyway, now I really like doing these answer and reply videos because I tend to learn a fair bit, not only about companies, but also about myself, because collectively you are smarter than me. And I do learn a fair bit by looking at your comments. So thank you for those who do leave these comments and these questions. Great questions on my videos. Now, before I get to answering some of your questions and replying to some of your comments, I'm going to go back to a couple of comments or questions by Sensei It Is and HBK Fortis. Kneppy, what are some must-read books from Sensei? You also mentioned websites, and also HBK Fortis says, if you have any book suggestions so I can listen to something at work, that would be great. The one about volume and or breakouts would be cool. Now, at this point in time, all my books, my investing books, are in boxes waiting to be moved. I haven't taped them up yet, so I do have easy access to those books. Unfortunately, I am quite busy at this point in time, so I don't have a lot of time to do any more videos than I actually am doing right now. But I do want to do this standalone video on these book suggestions, that sort of thing, because I do get quite a few questions in regards to that. I'm pretty sure I have talked about books I've read, but not a standalone video. So look out for that video. Hopefully I'll release it by the end of this year. Now, towards the end of the year, we tend to be a little bit more quiet when it comes to investing, quite a few days where there's no trading. So there is potential I might be able to do that video by then. So hopefully you have a little bit of patience. So thank you to Sensei and HBK Fortis, and look out for that video, hopefully by the end of the year. Now let's go to Fishball1634, who says, I think your circle of confidence is at chart reading and analyzing the financials. I'm pretty sure he means circle of competence, and I'm pretty sure it was Peter Lynch. I probably shouldn't say I'm pretty sure. I have a feeling this circle of competence either came from Buffett or Peter Lynch. I do know Peter Lynch was a big proponent of just buying companies that you know what they do. That's probably the best way to say it. You know what they do. You're confident in what they do. For instance, if you worked your whole life in retail, buying retail companies makes sense. Now, I'm not a big proponent or follower of this sort of investing style, because it means a lot of companies, a lot of the highest quality companies, completely are ruled out from your investing sphere. And for my personal self, I'm not confident in any single company or sector to be at the point where I would say I am competent. I wouldn't be able to run these companies. So what Fishball says here, my circle of competence or confidence is that chart reading and analyzing the financials is really important, because this comes back to knowing your strengths and your weaknesses. And the other thing is, I love looking at charts. Also, I wouldn't say love analyzing financials. I'd say I like analyzing financials. And I do think that's fairly important, liking what you do. And because I like what I do, particularly when it comes to technicals, I think I am becoming much better at doing that. And in a way, that is now my circle of competence. And hopefully over the next 5 to 10 years, it will become even better, when I could maybe even consider myself an expert on that sort of art. He also mentions, obviously, being interested in doing the hard reading helps. He also has a few companies he wants me to look at. Okay, I'm just going to have a look at the charts. That's it. So just charts. So we have Prenti. Prenti is on my buy list. Now I'm going to, there we go, PRN. Prenti is on my, I wouldn't say buy list, but it is on my watch list for charts that are looking interesting right now. So share price was sort of going sideways between May and about September, and then all of a sudden it started to show signs of moving into an uptrend. And I think we almost can confirm the share price of Prenti is in an uptrend, the initial stages of an uptrend. And this is exactly what I'm looking for. Share prices of companies or charts of companies that are starting a new uptrend. And we don't know how long this uptrend might go. It might be 1 month. Might be 6 months, might be a year, it might be 5 years, but that's the thing. Looks like the share price is trying to move into an uptrend. So definitely Parenti is on my watch list right now. Have not taken a position, but that doesn't mean I don't like the chart. A few other companies here. We have Archer, which I did have a look at the other day, Archer Materials, because they released something interesting. Chart is starting to look a little bit more interesting, particularly the last few trading days when they released that announcement. I forget what it was. Share price did get to at least a 3-month high. Share price did pull back a little bit, but it's still broken out. Now, if the share price pulls back even further than 29 cents, that would be a weakish move. So I want to see the share price of Archer Materials remain above 29 cents. But this chart is starting to look more interesting as well. And what else do we have here? AIZ. So Air New Zealand. Do I like this one? I'm probably not there yet when it comes to the chart of Air New Zealand, which is interesting because if you compare Air New Zealand to Qantas, completely different. Qantas is in a beautiful uptrend. Air New Zealand is in a downtrend. I don't think the quality of two companies warrant the difference in the trends. So have a look at Qantas. Yeah, what's that? Why is there a difference between these two companies? I don't think you can say, well, one company is high quality, the other company is not. I don't think you can have that argument. I just think it's sentiment. That's all it is. Sentiment, different sentiment between these two companies. In fact, if I had to choose one over the other, it will be Air New Zealand, just because I would say it's probably better value, but the chart looks worse. The chart looks worse. So that's the value side of myself saying I probably prefer Air New Zealand. Chart-wise or technical side, probably Qantas, but yeah. ETFIZZ. So I'm going to have to, I keep looking out to make sure, looking to see if the video is still being recorded. It is, that's good. Because last time it just stopped. It did come back, but that was too late. So this is the I have no idea what IZZ ETF is. What is this? Oh, China large cap. Huh? Okay, that makes sense what we're seeing here. So this is looking pretty good. I probably have look at that pretty big volume coming through when that stimulus started popping in or piling into the Chinese system, but or the Chinese economy. But I mean, I suppose there is a little bit of uncertainty what's going to be happening over the next few years, particularly when it comes to Trump and tariffs. Will that negatively affect China? Maybe it won't. Negatively affect China as much as some people think it will. What else? Xero, Select Harvest, Woodside, Xero. Xero is going to look good. I'm a sharer of Xero. And do I have to say anything about this chart? Do I have to say anything about this particular chart? This chart looks brilliant. In fact, it's looked really good since this time last year. In fact, this time last year, there was a day, exactly 1 year ago, the 9th of November, 2023, when the share price fell 12.4% in one day. That was a low. And look what happened after that. Share price dropped that amount, and the share price went sideways and started in the uptrend not long after. And it's been an uptrend ever since. And the share price, I don't think it's at an all-time high just yet. Oh, it's getting close. Oh, it's almost at all-time highs. It is at a resistance level, but chart's looking good for Xero. And I've already forgotten the other companies. Select Harvest. This one is, even though it's almonds, it's still a commodity company. It's like a mining company. Very close to breaking out a couple of months ago in September. It looked really good, but it just couldn't get above a nice little resistance level, and then it's pulled back. Yeah, I have no interest in this particular chart right now. Same thing is true when it comes to Woodside. No interest right now. Share price is still in the downtrend, still falling, and the most recent low is a little bit lower or very similar price in the low, but the previous low before that. So still in a downtrend when it comes to Woodside. You could say maybe there's some value in this company, but I'll be honest with you, this is not a quality company. This is not the sort of company you want to own for the long term. This is the weekly chart. The share price back in 2008 was higher than it is now. In fact, the share price has been going down since then. And finally, Horizon. This is one I am trading. This is an interesting one. This is not a trade based off the chart or an uptrend, positive sentiment. This is a trade based off value. Share price moved into this purple zone, this purple box, and that's sort of my value zone. So I thought there's a probabilistic chance the share price will be higher in the future than lower, just because there is value, and this is a support zone. So I thought might get a nice little capital return, and on top of that, a nice little dividend. So I thought I'd take a position in this box, not quite near the low, 330, and the share price now 352. Now, what I'm looking for is a share price to get almost to $4. If it got to $4, I'd be very happy, because that would be an almost, well, over 50% return. Capital return, that's not including the dividend. Now, it doesn't mean the share price will get to that level, but it has the potential. So thank you, Fishball. That was a very long answer. Kamalos, what do you think about Clinuvel? Well, I am a shareholder of Clinuvel, long-term shareholder. I have not even thought about selling. Share price has been under pressure, continues to fall. Whenever there's a little bit of positivity, when they release a positive announcement, the share price is always under attack. And that just shows you that the negative sentiment and enthusiasm of the sellers is just overwhelming the buyers. And that's what happens when share price is in downtrend. People just want to get out because it's a dog stock. Share price is falling. I think there is value in this company. One of the reasons I won't sell. Now, this is a one product company, so that is a threat. But the financials keep on increasing. In fact, the PE ratio of this company now is 19. It's below 20, which is extraordinary for the growth this company has. So there is no chance I'm going to sell, even though the share price is in a downtrend, just because I see value at these levels, and eventually the sentiment is going to turn around. And I do have $13 as a very important level for Clinuvel. If it falls below 13, that would be a fairly negative technical signal, and no signs the downtrend is coming to an end. You can always see whenever the share price goes on a little rally, the sellers come in. Sellers come in. We've seen that happen about 5 times in the past year and a half. And what I like to see first is share price go sideways and the company keeps on growing. The valuation, the PE ratio of the company keeps on dropping. And this company becomes even more attractive, and maybe they can start selling a second product, third product, sort of de-risk the company even further. That would be a good move. But I'm a shareholder, long-term shareholder of Clinuvel, and I have no intentions of selling unless they do something really bad. Anderson, when you are, okay, that's, this is sort of why time seems to go slowly when you're young, but quicker when you're older, because like 6 months when you're a 5-year-old is an eternity, because it's such a large portion of your life. But when you're 99 years old, 6 months is like nothing. It's a very small portion of your life. That's what he's talking about there. I must have mentioned that in my video, or something like that in my video. Chap Liquid, I'm pretty sure I've answered this. Botanics and Optic. So I'm going to have a quick look at the charts for both of these companies. Botanics, both of these I'm pretty sure are speculative companies or storage stocks. Botanics chart was looking interesting, still sort of looking interesting, but I am seeing a bit of weakness, and I do have this little level here at 30 cents. If it breaks below that, that would be a negative move for Botanics. And I think it is in a short-term downtrend, just because the share price high was 44 cents back on the 10th of September, and it has been struggling since then. So maybe the good times for Botanics Pharmaceuticals have come to an end for now. Market cap of the company is 581, so there's a lot of blue sky already priced in this company. I'm pretty sure Opthea is the same. This company has a high valuation, but I don't think it has any revenue. In fact, the market cap of this company is $1 billion. This chart is all over the place. So you can see pretty big run up, and then share price just collapsed. Another big run up. The share price has pulled back. Now, because this is a story stock with a valuation of $1 billion, I could see the share price of this company going either way, increasing significantly or dropping significantly. So this is a sort of company where I think you do need to know about something about the company. Because unless you're trading it, if you're trading it, that's a different story. Would I trade this right now? Probably not. Probably not right now. Anyway, thank you for that, Chap Liquid. So how much do you know about the companies is the first question. And then the other thing would be the chart. So Botanics is looking a little bit weak, and Opthea is just all over the place. Rick Fellion, Webjet closed down $250, or I think that's $250. In red closing $453. you best won't be happy. And I'm pretty sure Webjet keeps on falling. Is it still falling? Web Travel, now it's called. Oh, we have seen a little bit of rally of $4. Share price has gone from $4 to $4.34, so a nice little almost 10% bounce. But they did release that negative announcement on the 14th of October. Share price dropped 36%. Share price kept on dropping after that. This is an ugly looking chart. Not only that, share price broke through a support level. However, they have demerged. So we now have Web Travel. And what's the other one? Web Travel. Not even sure what the other ticker code is. Anyway, chart looks yucky. And you guys won't be happy. Yeah. 9 side. This is an interesting comment. I actually did read this one. It's interesting to note that Redox, which I do own, M Trading, announced an acquisition today of Auschem, but not via the ASX platform. I find that intriguing because if they don't release it by the ASX platform, yeah, maybe they consider it not price sensitive. But I think all acquisitions are price sensitive, no matter what, no matter how big they are, how small they are. Anyway, apparently it was not considered material. However, this is not the first small acquisition they've made this financial year without making an announcement via the ASX. Perhaps each acquisition is immaterial, but cumulatively, they may well be material. And I agree with that. I think every acquisition, I think even if you're a $10 or $100 billion company and you make an acquisition of a company that's $5 million, that's still material. Maybe not material, but it is significant enough that it should be announced. Because why are they making that sort of acquisition? Is there something funny going on? I don't know. You should let the or the investors decide for themselves. Anyway, that's Redox, and finally the chart. So this is a recent IPO that I bought because the chart started to look pretty good. Yes, it's moved into an uptrend back in March of this year, and I was a little bit late to the party, but I bought on a little bit of a dip. Share price went to $3.30, share price fell to $3, and I bought on that dip. Share price then went sideways for about 3 months and finally broke out back in October and has continued to go up. So a nice looking chart for Redox. And yeah, had no idea they've been making these small acquisitions. So thank you, Night Slide Glide. Matt Perdak says about Web, you said you would have sold this before today's 36% plunge because it was downtrend. However, looking at the 5-year chart, this downtrend seemed to be a part of a long-term uptrend before the 36% plunge. So this is really interesting because you can get different perspectives by looking at different timeframes. So you could look at the 1 minute time frame, maybe even the 1 second, 1 minute, 1 hour, 1 day, 1 week, or 1 month. And you can get a completely different thought, perspective, or opinion by that time frame. So let's have a look. Although in saying all that, this company is a little bit different because they went through that demerger. But if you look at the 1-day chart for Webjet, yeah, there's little doubt it's in a downtrend. Now, I do have this dashed line here, which suggests the share price probably bounced off $4.60 sometime in the past. So let's have a look at the weekly chart. Well, actually, it was, I would say, if you go to the lows of the COVID-19, the share price was in this sort of uptrend-ish. Yeah, you could especially put this uptrend there, almost. And I would probably suggest it broke through that uptrend on this negative day. Yeah, so I can see what Matt was saying. If you do have a look at this uptrend, this weekly uptrend from the lows of the COVID-19, it actually hit that uptrend or got very close uptrend. So possibly you could say, well, maybe there was going to be a bounce off that uptrend line. And today or that day when it dropped 36%, that was a break in that that possibility of bouncing off that uptrend. So you do get a different perspective by looking at the weekly chart. And even if you have a look at the monthly chart, maybe you can get a completely different perspective. Yeah, maybe not. You can still see the monthly uptrend or weekly uptrend in the monthly chart. And let's have a look at the 1 minute, 1 hourly chart. Let's do that. Yeah, I'm not getting anything with the 1 hourly chart, but I could almost guarantee you, if you have a look at the 1 minute chart, we're going to see a bit of an uptrend developing in this particular time frame. Yes, look at that. So this is a 1 minute chart, and lo and behold, it's been an uptrend since midday of the 6th. Share price has increased from $4 up to $4.34. So you get completely different perspective based off the time frame. If I was just looking at 1 minute chart, I'd say this is a nice little uptrend, developing web travel group. Really nice uptrend. Anyway, so thank you for that comment, Matt Purdick, because you're absolutely right. Doge do tag a drain or doji train. I try to catch fully knife. I got cut. This is regards to web travel again, and that can happen at some times. I think it's happened to everyone. Dicey says we should vote Dutton. I'm not going to vote for anyone. I don't like any politicians. I am not a fan of the current government. I'm not a fan of the potential future governments. I'm just not a fan of any politician right now. That includes here, and that includes many locations overseas. And I'm not going to say you should vote for anyone. Vote for whoever you like. That's what I'm going to say. We have the freedom to vote whoever we like. So do that. Even if it's a nutter, vote for that person. It's your right. Fishball says XF1 is a company that doesn't turn a profit. Oh, this is xRef and is it xRef? I used to own this company and I don't own it anymore, so I should know xRef. Yeah, xRef, and they've been bought out by SCEE. And when SCEE bought them out, or announced they'd taken them over, there was all of these comments about, oh, SCEE's taking over this company. That's not profitable. And I liked xRef about 4 years ago because they were focused on profitability and cash flow positivity as well. And I like that. And then they've sort of gone away from that. Anyway, so xRef is a company that doesn't turn a profit with massive debt. Not even sure if it can survive without capital raising. So if you want to look into the financials and agree that for shareholders, this was a good bid. I sold it 21 cents and broke even. Yeah, I'm going to have a quick look at xRef. So I held this many years ago, and because they went away from that profitability and cash flow train, I just lost interest in the company, and the share price dropped a lot. So let's have a look at the company's most recent. Let's have a look at the most recent annual report. This might take a while to open up. They don't release a pennies 4Cs, which astounds me. They were probably told by the ASX some point of past that they didn't have to because they had a 4 quarters of positive cash flow, but then they just went away from that. So this is going to take ages. Freaking ComSec is just takes so long. Oh, where's my market index? There it is. I don't think I'm going to be able to do this in time. Yeah, I will just wait for you. So, Fishy Man, Fishball says this company has a lot of debt. So let's have a look at their financials, their annual report. Here we go. So not a lot of revenue, $19 million of revenue. That's only 2024. I like it when you compare it to last year, but they've got about $20 million of revenue, it looks like. Profit after income tax expense at negative 5.7 million. So what happened to the company being profitable? Did they try to grow? I thought they were being very conservative with their, I don't know, maybe rising interest rates hurt them. I'm not sure. Total liabilities, wait there. Oh, I'm in notes. Oh, no, notes section. That's why. Here we go. This is what I'm looking for. I was in the notes. That's probably why here we go. 2023, 2024. I thought it was weird they didn't have 2023 numbers. So revenue actually dropped. Not a good sign. Gross profit. So they have pretty good gross margins, but they spend a lot on employees. I don't like that. So 14.4 million is just on employees. So that wipes out a lot of their gross profit. And they also have spend a lot of money on overhead and administrative expenses. So it's like almost, $20 million just on employees and administration. Not a big fan of that. And they had a pretty big loss, 2 big losses in a row. And that's probably why the share price was in trouble. And let's have a look at their balance sheet here. Negative equity. In fact, the company has gone from negative 572,000 to negative 5.8 million. The reason behind that is because the company has been losing a lot of money. And how much cash do they have? Oh, yeah, I'd say they would need to do a capital raising fairly soon. And they have a lot of contract liabilities, financial liabilities. So $7 million in financial liabilities. Actually, in fact, say it's $8.3 million in financial liabilities. We can go to section 19 in the notes to have a look at those financial liabilities. Here we go. That was just lucky I got there. Borrowings, borrowings, $8.4 million in borrowings. I'm not a big fan of that either. Anyway, so just by looking at financials, not a fan of xRef at all. Obviously, see something, and maybe they see xRef does something they're keen on and they don't mind that's loss making. Maybe they can find some synergies, which I hate that word, synergies. Anyway, I'm not a fan of xRef at all. It's a pity because I liked what they did, where they were about 4 years ago. And yeah, it just was a disaster after that. So let's have a look at xRef chart. Not the 1 minute chart. Yeah, you can see back in 2021, share price went to a high of 80 cents. So I was a shareholder during this period. Their share price started to turn down and I got out at some point. And yeah, 80 cents all the way down to almost 10 cents, if not 10 cents. So we're talking about a 90% drop in share price in a fairly short period of time. And the whole reason behind that is their financial state. That's it. No other reason. Okay, I've already talked about Optic and Botanics. How likely is Star Entertainment Group to issue more shares? Haven't they just done that? Didn't they just do that? Maybe that question was, when did they last do a capital raising? It was, when was it? They also sold their, I don't know, so it's at least 3 months ago. Anyway, well, you know what you could do? Just go S star capital raising. There should be a site that's September 2023. I'm pretty sure they did. I thought they did one in 2024. Maybe because I'm getting old, just time goes so quickly that it was actually in September 2023 they did a capital raising at 60 cents. Yeah, so it was over a year ago, which I'm shocked. I thought it was much, not that long ago. So will they do another capital raising? Potentially. That's all I'm going to say. Potentially. I don't know. How likely? 20%? I'm just guessing that. Hey, Kneppy. Landy Lee says, hey, Kneppy, what are your thoughts on Southern Cross electrical engineering? This is an interesting one. So I am trading this, but I am on the verge of taking profits. On the verge of taking profits. And this is a really good example of developing a sort of a system where it shows you or tells you when to get out. So that's what I'm developing right now. So I'm going to show you a few things I'm looking at when it comes to this company. So what I've got here is in this blue line, you can see it stepping up. That's the 20% rise, 20% drop from the highs. So you can see it going up, and when it goes up, that means the company has gone to a new high. So 20% drop from that previous high. The other lines here, this black line is a 100-day moving average. So that's another thing I'm looking at. And also have my subjective support and resistance line. That is a horizontal light blue line, which I might change it to say this there. So I have 3 lines I'm looking at, 3 systems, like a stop loss or trailing loss system. So I have a moving average, also have stop loss, stop drop, which is this percentage stop. I'll just show you what it is. It is favorites. It is called trailing percentage stop from Kiv Ank Oz Billick. And also have my subjective resistance and support, or mostly it's going to be a support level. Now, what you can see here is up until recently, no reason to sell. Share price has remained above each of my 3 stop losses or trailing losses until the last few trading days. In fact, the share price fell below the 100-day moving average back on the 23rd of August, so not that long ago, and it's continued to fall since then, fell through my support level a few days ago, has moved up and is now right on that support level, and 2 days ago, it dropped beneath the 20% drop. So that 20% drop was from the highs the company got back in August. Share price at that point was $1 and say so 20% of $1.95 is 38. So we'll say 39. So we'll say $1.56. So that should be about $1.56, not on $1.56. So this is the weakest the chart has looked for this company for a long time. So I am thinking of taking a profit. Now, we did see share price rally 2 days ago on Thursday. I'd like to see share price bounce. I'd like to see the share price get out to $1.75. If it can't, if I see continued weakness, I will take profits in this company. So I consider this just a trade right now. And if the share price starts to rally again, I will buy back in. Now, we'll hear experts who say, no, you can't do that because you'll never buy back in. That's Balderdash, Durotech. I bought back in. I got a sell signal somewhere in here in early 2024, and I bought back in June. And the share price has continued to rise. Did the same thing with Bravura. I got a sell signal, share price continued to fall from when I sold, and I got another buy signal back in August, $1.26. The share price has continued to rise. So this comes back to your own mentality. If you sell something, are you more or less likely, or maybe it's neutral, are you? What's your chances of buying back in? For me, it doesn't matter. If I sell position, I'm just as likely to buy back in the future. I'm not going to have a bias against that company. And I think a lot of investors have that problem. They are biased against a company once they sell. It's sort of there's probably a word for it, some psychology word for it, but that doesn't affect me. But maybe I'm being naive, and maybe that does affect other people. Anyway, Sensei says, how many hours on average do you sleep per day? With New York Stock Exchange, NASDAQ hours, and ASX hours in your work shifts, it's not easy to get 7 to 8 hours daily. Yes, no, it's easy. It's very easy. I probably need, so I just go to bed when I feel like going to bed. So that's probably about 9:30 or so. That's when I get to sleep. And I typically wake up between 4:30 and 5. No alarms. I just get up naturally. And typically when I wake up, I'm alert. I don't need coffee. I'm not one of those people who needs coffee. In fact, I don't like coffee at all. And don't forget, I'm part-time. So I only work 4 shifts. Technically, I only work 4 shifts every 18 days. So I work a run of shifts. So 2-day shifts, 2 night shifts. Then I get 2 weeks off. So I'm not that busy. Now, funny thing is, there is whispers. I've heard that New York Stock Exchange is going to be open 22 hours a day. So it's going to be closed 2, open 22. And I'm going to love that. Anyway, so I get the normal amount of sleep per day. Yes, sleep is important. I don't like sleep. If I didn't have to sleep, I wouldn't sleep. But sleep is important. I acknowledge sleep is important. We need sleep. It's important. It's obvious it's important because when you don't get sleep, you feel it. And but I didn't have to sleep, I would love that. If someone came up with something where you didn't have to sleep, I would love that. But I don't think it's going to happen. We just don't understand why we need sleep, I think. Rick Thellian, Brisbane or Baby Bunting was more flat down to $1.75 after opening then rose, flattened then rose a little again. Okay, I'm going to have a quick look at Baby Bunting. I haven't looked at this chart for a while. So let's have a look at Baby Bunting. Can't believe Zoom's still going on. I'm going to get rid of my stop loss thing here. Baby Bunting, really low volume. There's one thing I've noticed, really low volume over the last few months. I would prefer some high volume coming in. Share price has pulled back from $2 down to $1.75. Is this a buy the dip situation with Baby Bunting? That's interesting. Just 1 second. Okay, that was Amazon delivering well, it wasn't Amazon itself. We're delivering a product, or actually 2 products, and I needed a password. So they would only hand the product over with a password. First time I've seen this, and I knew it was going to be delivered today, but I thought it was going to be delivered a little bit later. That's why I actually started recording this video at about 10 a.m. because I fully expected it to arrive about 4 p.m. Because that's what usually happens. Anyway, Baby Bunting does look interesting. So I put this down alongside Parenti as a couple of charts I do like. I'm not sure if I'm completely sold on Baby Bunting just now because of the volume. Anyway, so that's baby Bunting. Monogram says, how come you sold Dimerix? I thought they have access to 300 million when if they achieve their target. This is just a trade for me. I'm trying to stay away from the story stocks. There's still a bit of storiness when it comes to Dimerix. So I'm just trading this one. So share price did move into a downtrend, was in a downtrend. It broke out of that downtrend and I almost bought back in. So you can see the share price rallied really nicely up to 50 cents and it's pulled back to 40 cents. A pretty nice day, up 8% on Friday. And that's at a really interesting level. It really bounced off a nice little support level at about 37 cents. So that was the time to get back in at 37 cents. But the main reason is it's still more of a story stock than anything else. There are still a lot of uncertainties, still a bit of risk when it comes to this company. So that's the main reason I sold, just because the chart started to look a little bit weaker than it had. Before when I sold, the chart looks pretty good. Look at that. It's a pretty chart. The other thing about Dimerix is look at the volume. We can see volume decreasing. I don't like that. I'm a big fan of volume. MJ, year 4XS. Do you have all your eyes on any small caps at the moment? Nothing. No. I suppose some I'm trading. Let's have a look at some I'm trading. One is DeLorean, DEL. I do like that. They were told by the ASX they don't have to release any more Appendix 4Cs because they are cash flow positive now, which they need 4 quarters of that. Also depends on what you define as small cap. So in fact, I have a lot of small caps I'm keen on. For instance, Stealth. I like that company. Bioxyne. What else? A company called Bioxyne. I like that. How cheap that company is. Possible how cheap that company is. What else? Tasme I like. DeLorean, there's DeLorean. Yeah. In fact, I have a little small cap portfolio here. Small cap watch list, I mean. So let's have a look at my small cap watch list. Let's have a look. Prime Financial, COSOL chart looks pretty bad at the moment. Verbeck, Sensen. I do like SNS, Mayfield, Swoop. I'm interested in SWP. Sequoia share price has dropped a lot. I think the market is panicking there a little bit. Prophecy, I've always liked that company, but I'm just waiting for that company to hit an inflection point. They're very close, and they've been very close for a while. Also like IPD Group. I've liked that for many years, however. So those are some of the companies or small caps I do like. I do like a lot of small caps. In fact, I prefer small caps over larger caps just because there's a lot more room for those companies to grow. Look at the banks. Banks aren't going to grow, but people, for some reason, people are obsessed with the banks right now. Big Boy Baby, an insulting AGM proposal from DGL to award the CEO 710,000 shares in performance rights at all-time low prices. He holds 50% of shares, so doesn't need more incentive. I will be voting against it, and I would be voting with you. I would be absolutely voting with you. Yeah, the CEO should not get any performance rights at all. He has not performed over the past few years. The company has not performed over the past few years, and some of his actions do not justify any sort of performance rights. Yeah, so I don't like how some boards just give the CEOs of companies just ridiculous performance rights. It's a epidemic, I think, at times. It seems like it's an epidemic. Droneshield looks like ABC connecting wave for the final wave C down. Okay, Jason Nimmo is talking about Elliott waves, I believe. I actually don't know a lot about Elliott waves. I'm going to be honest with you. Let's have a look at an image. I'm pretty sure that's what he's talking about. Maybe this Elliott wave theory. So we have a few different waves. So what did he say? ABC connecting wave for the final wave C down. ABC connecting wave for the final wave C down. So he's saying we're near the end here. Let's have a look at the chart for Droneshield. And again, I don't know much about Elliott waves at all. It's one thing I do want to learn about, however. And as I mentioned, maybe I haven't mentioned this, learning never stops. In my opinion, learning never stops. I want to keep on learning until the day I turn 1 million years old. I am immortal, by the way. I have no plans of dying ever, and will continue to learn until I become 1 million years old. That is my plan. Okay, I think this chart is awful at this point in time. See if you can. I wonder if they got Elliott waves in here. Let's have a look. Oh, they will, without doubt. Elliott, you got to spell it right. Elliott wave chart pattern. Oh, I have to get rid of something to get it in. I don't like this chart at all. Yeah, share price is in a downtrend, in my opinion. It does look like, if you just have a quick look at that, it does sort of look like that, doesn't it? Yeah, it does sort of look like that, as what's it, Jason Nimmo said. And how far can it fall? I have no idea. Anyway, I'm out of Droneshield at this point in time. Landy Lee says, what do you think of Electro Optics? So last time Landy Lee asked me a question, it was about Southern Cross Electrical Engineering, which I am trading. I also own Electro Optics, but for a completely different reason. So this is, I own some shares in this company. I have traded this company in the past as well. There's me trading it, bought some shares at 86, then sold at $1.09, bought back in $1, and then sold at $1.70. And I have not bought back in since then. So that's March. So it's like 7 months ago. And the reason I haven't bought back in is there's just no trend. Share price has been quite volatile. I can see the difference between the peaks and the troughs are quite large, in almost like 50%. But those differences between the peaks and troughs are becoming less, or lower and less, or whatever word you want to use. And at this point in time, the share price is moving towards the bottom of the range, towards $1.22. So that's interesting. So if it breaks below that, that would be negative. So an easy way to trade this is buy at about $1.22, expect the share price to go on a rally. Now, longer term, yeah, share price got up to about $10 back just prior to COVID-19. And I sold shares then. So I held this company for a long time. So I think I bought, forget when I bought, many, many, many years ago. I don't think I bought $1, maybe $1.50. And then the share price in 2019 went from $2 to $10 like that. And I just had to take profits, but I did not completely sell out. So I think, if I remember correctly, I took 80 to 90% profits, but I still had a little bit of shares in the company. And then it just collapsed. And I've just maintained that holding. I have no intention to sell Electro Optic Systems at this point in time. So at this point, right now, if it falls a little bit further, I could be tempted to take a sneaky trade in this, expecting a bit of a bounce. But you can see each successive high is lower than the previous one. So less enthusiasm of the buyers as it gets to those prices or to those levels. So this is sort of like a descending triangle, which is a sort of a bearish pattern. I'm pretty sure that's a descending triangle. Descending triangle. Yeah, it's a descending triangle. Yeah. And I'm pretty sure it's bearish. Although if you look at this one, it says it's sort of implying that you get descending triangle in a downward trend. And you can't really say that here. Anyway, thank you for that, Landy Lee. Droneshield looking pretty scary. Yes, I've already talked about that. It is looking pretty scary. Gazmo. Chap Liquid, thank you for checking out Opt and Bot for me. Love the videos. And I've done it again. I've already checked it out for you. Okay, hi Kneppy. Thoughts on EGL? Is that environmental group? There is a small pullback currently which caught my attention. I follow the process I learned from you, aka looking at chart volume, all the company's reports dating back a year, and a bit, well, this is a long comment, and a bit checking performance metrics, ROE, revenue on FinChat. Everything checks out, but the only concerning thing is that some branches, child companies, are underperforming. Fortunately, the rest of the branches are doing good and leading to good results, which the company keeps releasing. What are your thoughts on this? Also, OSCO AHC also caught my attention, and the results are kind of similar to EZZ before it took off with a huge increase in all their numbers, blah, blah, blah. So I'll talk about these two companies, EGL and AHC. For full disclosure purposes, I am not a shareholder of EGL. which I'm pretty sure is an environmental group. I do like the chart. This could be an interesting buy the dip situation. Share price has pulled back from 42 cents to 36 cents. Pretty nice uptrend. If I put in my stop loss thingy, this is a really nice chart. I like this chart. If I was a holder, I would not even think about getting out of this just yet. If I had to put in sort of a resistance level, where would I put it? I'd probably have I'd have it right there maybe. So that's sort of, so our sell signals are between 36 cents and 31 cents. So share price is just above that. So if share price does keep on falling, that will be a little bit negative. So I need to see the share price bounce from here when it comes to environmental group. When it comes to the financials of this company, pretty sure this company has been acquisitive, increasing revenue, that sort of thing. And that's all I'm going to talk about. They are profitable. So everything's moving in the right direction. And that's probably why the chart is moving in the right direction. So this is one of those small caps that I don't mind, but I'm not a shareholder. Now onto Osco, I am trading this. So this is one I am trading right now. And we saw the share price go sideways for a while, and then the share price popped up, sort of broke out on the 11th of July. It went sideways and another nice little rally on the 19th of September. I do like this chart as well. The other thing is the volume. Look at the really big volume coming in September, October, November. That's another good sign. Compare that volume to what we saw over the past year. Not much at all. So that's a good sign. This company is getting on the radar of some of the big boys. Maybe not the big boys, but maybe some of the small cap investors. And this is another small cap company I like. In fact, in the last year, $58 million of revenue, $7 million of profit. And in the last half year, $35 million of revenue, $5.9 million of profit. So this is just a trade for me. I also like the financials as well, but mostly just a trade. So what's the difference between a trade and holding a company for long term? I will hold a high quality company for the longer term, but high quality companies need to, I suppose these days, high quality companies need to convince me they are high quality, because I have made the mistake of calling some companies high quality, and I don't think they are high quality at all. Thank you. That Ray Wilkin. Thoughts on AF Legal? Not a fan straight away. I'm pretty sure they are AFL. I'm not a fan of law companies. Not a fan at all. So is Slater & Gordon, wasn't a fan of that company. Shine Justice, not a fan of that company. So not a fan of this company. Not a fan of accounting companies. Not a fan of any of those sort of companies where the, what do you call it? The capital is labor. That's the talent, is the labor. So law companies, so lawyers, accountants, the sort of the what do you call it? The asset, the main asset of accounting companies. So I'm not a fan of those sort of companies, because people cost a lot of money. And to keep the talent in your business, you have to spend a lot of money. And a lot of times these lawyers and accountants, they have ambitions to either form their own company or to go in a different direction. So you have to pay up for the talent. So I'm not a big fan of these sort of business models, particularly on the ASX. Anyway, so this is AFL Legal chart, and I'm not a big fan of the chart either. In fact, I don't know much about the company. Just have a look at some of the financials. Revenue is pretty low. Market cap is 12.8 million, so it's a fairly small legal company. So I'm not a fan. Personally, not a fan. But doesn't mean you don't have to be a fan. Al Borco says, thank you for your videos. Those are very informative. In many videos, you'll share your success stories when you bought low and sold high. Are there any horror stories you could share? I believe that we'll all learn from our mistakes more than our successes. Thank you. What's the worst? Well, I've had 2 companies go bankrupt. So the last time, I'm trying to think the last time that happened. Oh, I bought a lithium company a few years ago that hasn't been traded, hasn't traded for 2 years, XTC Lithium. So that's now in my superhero portfolio, and I should have just got out. I don't know why I kept holding those shares in that company. So that company, I'm not sure what's happening. It's still XTC Lithium. it hasn't traded for, I can't remember the last time it traded. I don't think this is going to be on the ASX too longer. So last traded 27th September 2023. So over a year ago. I thought it was longer than that. Share price, it's not 20 cents. I'm pretty sure it wasn't 20 cents. They must have done a capitalization. I did have a company go bankrupt back in 2015 or 16. It was a drilling company. And in 2016, the mining sector went through a massive downturn. So a lot of mining companies, mining services company, had a really bad couple of years. And this particular company went bankrupt. Now, they were a shell. They became a shell. And then another company took them over, took over the shell. That company became AU Make. And then I sold my shares in AU Make at a higher price. And then AU Make went through COVID-19, share price dropped. And I've had share prices go down 80%, 90%. Pointera is a perfect example. Pointera. So I still hold Pointera. So I bought Pointera. Bought Pointera way back in sometime in 2020. Share price went all the way to 90 cents. I was in massive profits. And share price has dropped from 90 cents to 4.1 cents. Now, I think I did sell some shares at one point, but I bought back in at a higher, not at a higher price, but I bought back in at a much higher price than it is now. And the share price has just kept on falling. And I'm still waiting for the transition period. And so a lot of these, I've had quite a few of these sort of situations when I bought a story stock on hype and I thought, oh, this sounds really good. And then share price just dropped. And that's why I'm way more wary about story stocks right now. Because even though the story sounds really good, it doesn't matter if the company can't make a profit or can't sell anything, can't make a cash flow. This is what happens. Share price will drop a lot. So I'm trying to stick away from these story stocks. And I'm looking for companies that have at least selling something, have increasing revenue, profitable, cash flow positive. And I believe if you stick to that, even if they're small cap companies, you will do really well. And I'm finding that. So I'm staying away from these story stocks now. And that's why, this is sort of the reason why, Pointera and many companies like this. Many companies like this. And that's also another reason why technicals is really important. So if I was using technical analysis for Pointera, so I bought, can't remember where exactly I bought. I remember Bevan Slurry bought some shares or bought a stake in this company back in July 2020, and I bought just after that. So this could have been like an 8-bagger for me by the time I got so high, and I thought, oh, so much potential, I'm just going to keep on holding. And if I was trading this, I probably would have sold out probably sometime in May 2021 at a share price of about 55 to 60 cents. So it would have still been a nice profit, and I've seen no reason to buy back in since then. There's just been no reason. Share price has been a downtrend. It started to look positive here back in July, but look what happened since then. It's just gone back into a downtrend. So I have countless stories about that. And the whole reason I'm tending towards technical analysis is all about protecting your capital. In an instance like this, if I use technical analysis, I would have sold out a profit, a pretty big profit. And so that is why I'm veering towards technical analysis and also veering away from story stocks. The potential upside is quite high, but big buts. And I'm going to be honest with you, the biggest horror stories I have had, in fact, I'd say the 99% of horror stories I have when it comes to investing are around story stocks. They can make you rich, but they also can destroy. And to be honest with you, you don't hear the stories about story stocks destroying the wealth of people. Sometimes you do hear about story stocks creating massive wealth for people. So thank you, Alborco. Hi there, well done, very informative. DVP looks interesting. Let's have a look at DVP. And I think this popped up on my radar the other day. Oh yeah, I could see why it popped up. It started to look like it was moving into an uptrend, and we have seen the share price pull back from 260 to 230. This does look like the possible beginnings of a new uptrend. I probably would like to see the share price get above 270. to be honest with you, but it is looking interesting, but not as, I don't like it as much as Baby Bunting and Parenti, but still starting to look good. Brandon 6618, what are your two ribbons on your chat? Are they Bollinger Bands? What does it represent? What settings? I think I might have answered this. So they're just moving averages channels. So I define these as short-term moving average and the longer-term moving average. So for me, they represent trend or sentiment. So for instance, developed global, we see red, that means negative sentiment, negative long-term sentiment, negative short-term sentiment. You can see in the last month or so, one of these bands has turned green. So short-term positive sentiment, but still longer-term negative sentiment. It's not until you get to a company like, what's a good example here? What's a good example here? We do Consol. So Consol had, you can see a really good, this goes back to here, let's go here. So look at that beautiful green colors, but on occasion the share price would pull back. But the longer term trend, sentiment positive. And then once we went into 2023, even the short-term sentiment was positive until a few months ago. And we've seen the short-term negative sentiment drive the share price down, back down to 90 cents. And even the longer-term sentiment has just turned negative. So that's all it is. It's 4 moving averages, and it's 100 and 200, which is the longer-term moving average, 25 and 50 for the shorter term. You might say, well, shorter term should be less than 25 and 50. So that's what I do. It's just a thing I look at to determine trend and sentiment. And yeah, hopefully I've answered your question. So not really Bollinger Bands, not Bollinger Bands at all. LGPASX. Oh, Little Green Pharma. Okay, yeah, I talked about that company. Thanks, Kneppy. 2 P's, not 2 E's. Thanks, Bruce and Dale. Oh, Greg Gamer. Thanks, Kneppy. These focus videos on possible breakouts are great. Let's have a look at how LGP has done since I did that video, because the share price popped up significantly on that day. And then the next day, it jumped even further. Share price actually went to 16.5 cents. And then since then, the share price has pulled all the way back down to 11.5 cents. Could this be a buy the dip situation from Little Green Pharma? I think it could be. I think there is potential. The trend and sentiment of this company has started to shift from negative to positive. Will I buy a position or trade a position in this company? Not necessarily so right now. Love the analysis. Any update on Betmakers? Betmakers. This ran up pretty good leading into Melbourne Cup, didn't it? Well, maybe not. There was some pretty big volume on the 1st of November, and the share price has pulled back. I would say, and just looking at this longer term, share price has been going sideways for over a year. It's been consolidating for over a year. That means the longer the share price consolidates, the better, because when the share price breaks out, it can go on a pretty big run. The reason I like consolidation periods is because all those shareholders who bought at higher prices are just becoming bored. They see the share price going sideways and go, I just got to sell out. I can't take this anymore. I'm going to sell out of my holding in Betmakers at 10 cents. I just can't take it anymore. And eventually all those shareholders are gone. Eventually they'll leave. They'll sold out because they've become bored. And you'll have a new, fresher registry on the shareholders or shareholder registry. And then there's less resistance moving forward. So if the company releases something positive, what's going to happen? Instead of all these sellers flooding the market with their shares, there'll be none of those left. So you have more enthusiasm from the buyers, and that's why the share price can go on a run. And that's why whenever you see the share price try to go on a run in a downtrend, it usually fails because of those sellers, those shareholders who just need to sell out. And that's why I do like consolidation periods. And this is a long consolidation period. It's almost 1 year. It looked promising, the share price back in April, May, but yeah. I do like that chart, but I like to see the company become profitable and operating cash flow positive. EP is exercise of put. Yes, I don't know what that's in relation to, but I'll just trust you. Thank you, Sensei. Thanks a lot, Kneppy, for Mithril gold and silver review. Okay, so let's have a look at this chart. I haven't had a look at this chart for a while now, so let's have a quick look at Mithril, silver and gold, or is it gold and silver? Silver and gold. Ooh, this is an interesting chart. So a really good run up in the share price. I do get nervous when I see this sort of run up because eventually you're going to see the share price pull back. Just when? So I very rarely, if at all, buy into these sort of patterns, and we have seen a pullback in the share. In fact, the share price will pull back from 80 cents down to 40, so 50% drop in share price. Now there was a little bit of bounce, and that bounce wasn't that strong, and now the share price has moved down even further. In fact, I don't like this shorter term chart. In fact, I'd say this is a short-term downtrend. Yeah, and this is a case where my 2 moving average channel is just worthless because the movements, the volatility has just been too strong, which too amazing, too intense. Maybe that's a better word. And so those shorter-term and even the longer-term moving averages just completely worthless. Any update can you do on silver stocks? Maybe one day I'll do a bit of an update on silver stocks. There's like 3 I can think of. So there's Unico Silver, Andean Silver, I suppose Mithril, gold and silver. But I do know, like a few years ago, there was no silver companies, or maybe one silver company on the ASX. So we have seen a little bit of proliferation of silver stocks. So I might do maybe a standalone video on silver stocks. See how I feel. Another comment about Little Green Pharma from Nice. This did really well post-COVID. Looks like it's coming back now with positive cash flow. Yes, and even the charts don't look pretty good. APA, Just James Dean. This is in regards to the debt APA have. APA Group. APA Group brings in enough cash for servicing debt, but the capex program is burning a lot of cash. So APA Group would be, capital heavy. Capital intensive, that's the word. Capital intensive business. I'm going to have a look at the chart because the chart has looked really bad lately and it still looks bad. I think eventually you will see some shareholders, particularly value shareholders, go, "Ooh, there's some value in this company." But I just don't like the chart. If you have a look at the weekly chart for APA Group, the last time the share price was this low, we're talking about almost a decade, maybe. Yes, we're talking about a decade low for APA Group. So possibly there is value, but the chart and the sentiment in this company are just atrocious right now. Anyway. Oh, so Dykesy did buy some Little Green Pharma a few weeks ago. Well, a few weeks ago from when I did that video on that company. Only thing I don't like is 2 billion shares on, this is Bioxyne. 2 billion shares on issue. Okay, if you don't know shares on issue, the easiest way I found is to go to Market Index. Go to Biome site, and it has shares on issue right here. It says 219 million shares on issue. Okay, so you say 2 billion shares on issue. Oh, they must have done a share consolidation. The share price was not 65.5 cents. Oh, wait there. I am totally looking at the wrong company. BXN. Just a brain fart. So Bioxyne. Sorry, Bioxyne. I think just because they have the same first 3 letters, Bioxyne and Biome. 2 billion shares on issue. I was going to say, Bioxyne doesn't have a share price of 60 cents. 1.2 cents. Okay, a couple of things I don't like about this company, and I did put a sneaky bid in, by the way. And I'm allowed to buy my rules. I cannot buy a company below 1 cent. I think even 1 cent. Share price of this company was 1.2 cents when I bought. Anyway, I don't mind what I'm seeing here. 2 billion shares on issue doesn't bother me, but once it gets much above this amount of shares, it does bother me. And the main reason is because of share price. Unless a company starts to grow significantly, that sort of share price I don't like, and shares on issue I don't like either. So there are a few things I don't like about Bioxyne, but I do like the potential of the company, and I do like the revenue growth. Anyway, so I bought a small position in Bioxyne for that potential. Okay, thank you, Sensei, for first commentos. I probably should end it there, this video, because I've stopped recording it when I went away to get my package, so I have no idea how long this video is. So I'm going to end it there. Sorry, Just Streams Dean, talking about wage growth. I'll talk about your particular comment in next week's video. And next week's video, I should be recording from home. So all next week, I won't be home. I should be driving home on Friday. Anyway, that's it for this video. Have a good day. Talk to you later. Bye. And don't forget, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.